Dana, what is the single item of conference board distinction in your data collection? What's the thing that the conference board sees about America right now that matters?
Well, certainly it's consumer confidence. And, our last survey was from February, and it was very clear that consumers were still looking to spend, but they were becoming very frustrated about inflation. And certainly there were some concerns about rising interest rates. And certainly with the war in Ukraine, inflation is going to become even worse, in our view, looking ahead.
Do you think that consumer sentiment is deteriorating more or less than people seem to think when they look at the University of Michigan surveys and when they look at the actual retail sales as the numbers come out?
Sure. So with the University of Michigan, their measures are very closely aligned with, say, financial markets, and our measures are more aligned with labor markets. And labor markets are doing very well. We saw in the last employment report, healthy gains, very healthy gains, fewer people unemployed, a little bit of improvement in terms of the participation rate. And so we're seeing very strong employment environment, and that's being reflected in our measure. So our measure hasn't fallen as much as the University of Michigan, but still our inflation expectations gauge continues to rise. When we ask consumers what are they worried about, they're saying, look, inflation is just a big issue for us. And certainly looking ahead, we're going to see higher prices for food, for energy, for metals. Why is this relevant? Well, food goes into everything. So people are going to see higher costs for cereals, meat. Thinking about energy, gasoline prices have doubled so far. And even for metals, many semiconductors use these rare earths and metals from Russia and the Ukraine. And certainly it's going to be more expensive to buy things that require computer chips like cars, cell phones, other gadgets.
So if you take a look at the numbers that we just got on retail sales, yes, the revision was higher than expected for January, yet we did see a massive deceleration and even decline when you look at the control group. And this is on a nominal basis. On an inflation-adjusted basis, essentially, this is retail sales declining at a pretty significant pace. Are you concerned about that? Is this potentially something that you're watching as a warning sign that consumers are not going to absorb the costs like some expect?
You're right. When you look at it on a real basis, today's data probably are negative in terms of a decline in sales. And I think that, it's not really terribly surprising, even the fact that you had such outsized sales in January. It's really not, you can't have consecutive increases like that on a regular basis. So maybe you should just add the 2 months together. But certainly we are very worried. Again, with prices rising, people are just going to stop spending at some point. And so we'll be watching very closely our next consumer confidence report to see if people are souring on things like vacations.
Peachum, we were talking with Greg Peters, has an under 2.5% economic growth for 18 months out. Let's call it 2023. What is your view of that? I mean, do we really get down solidly under 3% growth out in a year from now?
Oh, yes. In fact, the conference board has downgraded its forecast for this year. Year on year, we had 3.5%. We lowered it to 3%. If you look at quarterly averages, quarterly annualized numbers, we're in the 2 to 2.5% range. So certainly next year we could be in the 2 and 2.5% range.